Hello and welcome to View from the Markets. Nigeria is celebrating 50 years of independence this month, but its history is often described as one of misused wealth and missed opportunities. Today, however, it seems that reforms may be gaining traction again, and here to discuss this with me is Titus Dakwah of Nubuke Investments. Titus, welcome to the FT.
Thank you.
Now, let's start off by looking at what's happened to the stock market. We've got a graph here, shows us performance over the last 10 years, and we can see that beginning in 2006, a very strong rally began, went on for 2 years, and then ended in a pretty dramatic bust. Share prices down 70% in the space of a few months. A lot of people lost a lot of money, a lot of shady practices were revealed, and confidence took a battering. Where do we stand today? Is the Nigerian market one you can trust in?
It's increasingly a market body that you can trust in fact. The reforms put in place by the current CBN governor, Lamido Sanusi.
That's the central bank.
Central bank governor, sorry, Lamido Sanusi, has restored confidence, or is in the process of restoring confidence, which is the main part. Certainly the imposition of the AMCON bill in particular will.
What's that?
That's the Asset Management Corporation of Nigeria. And that really is at the fulcrum of the reform package, and that's looking at wiping away some of the bad debts that are on some of the failed institutions, so that lending can then carry on through to the real economy.
Now, Nigeria is not, of course, a Western market, and we have to remember that. Are there any sectors of the market where you're still wary of investing yourself?
Well, in my opinion, the sweeping reforms that were targeted to the banking industry should have extended to the insurance sector as well. So I'd be less secure or less confident going into that market in particular.
Okay. Well, you mentioned banks. Let's pull up another graph and talk a little bit about the banking sector. Now, what we see here is how the Nigerian banks helped to inflate the credit bubble. Now, at the market's peak, they were 60% of capitalization, and they were throwing their money around. And this graph shows us that nominal credit growth to the private sector was increasing hugely. And then again, from early 2008, it fell off a cliff. Now, you might conclude from this that companies were being starved of capital, but that wasn't actually what was going on, was it?
No, that wasn't the case at all. In fact, the credit that was extended to the private sector through the banking system, as you correctly said, started at the end of 2006. That percentage annual year-on-year growth from around 20% to around about 100% by the end of 2007. Unfortunately, some of that credit was in the form of margin loans. However, a lot of that credit, and certainly some of the credit, is still being made available to the end consumers.
Okay, but the point is that some of that credit was going to speculators who were taking these margin loans and using that to basically push up the market.
Exactly. You alluded to shady market practices, etc., and that was definitely the case.
We've got a second graph here, which I think is showing us World Bank numbers. They've stripped out the margin lending, and this is pure credit to the private sector. So here we can actually see that it's rising steadily, and that's really crucial to unleashing the potential of Nigerian business, isn't it?
Exactly. In terms of credit available to the real economy, you can see that the taps were never really turned off.
Okay, let's move on to look at the oil sector. This, of course, is crucial to Nigeria. It's where there's been a lot of mismanagement and a lot of corruption. And what we've got here, a graph showing us foreign direct investment flows into the country. Most of these FDI flows are into the oil sector. And we can see that after a peak in 2006, they've actually come down and now seem to be flatlining. So what's going on here?
What's happened is mainly during the Obasanjo era.
That's the previous president.
The previous president, exactly. He cancelled, annulled some of the contracts, and there was a process of engagement with the IOCs to bid
the international oil companies.
International oil companies, rather, to bid for offshore oil contracts. Now, this process was a little bit haphazard, and some of the IOCs in particular are now currently, at the end of 2009, reviewing the process. They think it's less attractive, obviously, to them, but the Nigerian oil sector is looking to redress some of the benefits, bring back some of the benefits to the local market.
So as long as the IOCs are reluctant to put money in, these numbers are going to stay flat. But Nigeria is working on a petroleum industry bill, isn't it? It's been in the pipeline for a long time. Looks like it might be passed later this year. How significant is that?
It's certainly going to be significant. You can see the level of interest, particularly in Asia, looking towards putting some of that FDI to work in Nigeria.
So whereas Western oil companies, the traditional source of money, may be reluctant to come in, there could still be money from other sources such as China. And I guess more generally the point on Nigeria is that we're seeing progress on some fronts, but the country's experienced lots of false dawns before, and until next year's elections out of the way, there are going to be uncertainties, aren't there?
That is the case. However, given the extent of the reforms, you'd probably be backing Nigeria in this case, and certainly from the interest that we've seen and the valuations in the market, that's certainly the case in terms of risk-adjusted returns.
Okay, Titus Dakwah, thanks for joining us. There's more information on Nigeria in an FT special report, Nigeria at 50, which is available online, and for up-to-the-minute information on what's happening across the emerging markets, you can check our website, Beyond BRICS.